Good evening, everyone. Welcome to another episode of Trading Heads web series, where market minds meet method and wisdom meets real world application. Today, we are for something truly special because today is not just about charts or strategies, it's about clarity, clarity that cuts through the chaos, clarity that only comes from decades of experience, data driven discipline, and the courage to trust rules over emotion. It's my absolute honor to welcome Mr. Rakesh Pujara, the founder and managing partner of CWA, a name synonymous with structured, rule based investing in India. With over 25 years of trading and investment experience, Rakesh sir has seen it all: bull markets, bear markets, and euphoria, fear, and everything in between. He completed his BCom from Mumbai University in 1992, followed by CWA from ICWA in 1996. Before founding Compounding Wealth Advisors in 2018, he led Naman Securities as its CEO, a high-stakes proprietary trading desk. But what sets him apart is this: he didn't just adapt to the market's badness, he coded calm into it. Since 2013, Rakesh has been live with rule-based trading systems that remove emotional roller coaster and replace it with structure, discipline, and data. He doesn't chase traders. He doesn't chase trades. He builds systems that do the thinking so he can focus on the execution. He studies market behavior but trades by rule. And today he is here to share how you can also do the same. In today's talk, titled Cracking the Code, Rule Based Investing That Outperforms Emotion, he will walk us through why rules are greater than gut feel, how to go from chaos to clarity, the power of auto cutting losers and letting the winners run, the beauty of built-in risk of modes, and lessons forged over 25 plus years and 12 years of data management. So, friends, fasten your seatbelts, keep your notepads ready, and please join us giving a virtual round of applause as we welcome Mr. Rakesh Pujara. Hello, sir.
Thanks for having me, Shobit, and it's a very lovely introduction and very carefully drafted words that you're using. Clarity over chaos, right?
Yes.
Okay. So that is what I keep on looking because a lot of people, including myself, struggle with a lot of emotions, right? Like market fluctuations make you take a lot of decisions, reverse your lot of decisions, and then take some premature exit, take some premature entries, and then end up losing money despite having your view correct. That is the
Correct. We all have gone through that, right, sir?
so most of the people analysis is like few months or few years job, like 1 2 years and everything. You'll be able to analyze market like a charm. The whole problem comes when you try and execute your own analysis. That is where
Sir, 1 second. Sir, your voice is coming a little low. Can you
yes, I
speak?
wait.
Yeah.
I'll bring it little closer to me. Now it is
Perfect.
clear, right?
Yes, sir. Perfect. Yeah.
Okay. So the lot of issues come when execution happens, right? Your analysis could be right. Still, you could be losing money in the market. That is the experience of so many people, and a lot of people want to do things by themselves, but unable to find the way to do it. And the rule-based approach will definitely help them walk the path they want to walk, and it's a great thing. And still volume is low. Okay.
Yeah.
Yeah, let me get another mic. Now it's better.
Yeah, I think it's better now. Can
Guys,
you
just give me a
confirm?
heads up. Are you able to hear me loud and clear?
Yes, I think yes. Others? Yes,
Okay,
yes.
just put yes
It's
in the
fine.
chat. Okay, thanks. Okay. I'll try and keep my voice little elevated so that so a lot of people I what I found myself with myself. So a lot of the models that I built were actually for self consumption, and later on I entered business of investment advisory, and I monetized it by introducing those rule based investment baskets, and I listed that on small case, and people are very happy with it, and I myself very happy. And you can say we have solved the puzzle of investment through very simple rule based approach. In last 2 years, the all the portfolio are live, and people are very happy with it. So today, in today's session, my endeavor is to make people understand the power of equity first. Okay,
Right.
how powerful the equity is in terms of generating your wealth in the long term, and how you can navigate this volatile times of the market with completely rule based approach. And it's very easy to very simple, very easy to execute, but very difficult to follow. Okay,
Correct.
because
Yeah.
simple things are hard to follow. So today's session is all about that. So
Perfect, sir. Yes, sir. I know we first met somewhere in 2016, I suppose, right?
yes.
And I would like to ask you about how you entered into stock market. What was like going on in your head, and then your journey little bit, and then we can go to the presentation.
So initial encounter was always like everybody in a young age wants to make a quick buck, you know. So I
Right.
also entered with that intention in the market in 1992, end up losing money. Then I realized, कि boss, you have to have some method to earn money out of this market. And since I was a professionally qualified ICWA, I started doing some jobs because capital was not there in the initial stages. So there was no possibility of trading the market that time because I had lost a lot of money in the market initially. And it took a while before I could cover my all losses. So it took me almost a decade. And I again started entering the market in 1992. But I never entered 1999, sorry. I never entered market directly. So I started doing a job in a broker's office. That is where in 1999 I joined Naman Security as a finance manager, and I started looking at the market with a close eyes. Then I realized there are a lot of arbitrage opportunities in the market, kind of a free money, almost risk-free money. You can say not free, risk-free money. You have to invest capital. So those were the days where you will be able to generate 2% per week, and that too
Yeah. At that
risk-free.
time, the market was like
Not efficient,
Novice.
not
Yeah.
very efficient. All the
Non-efficient. Yeah.
systems were not in place, and a lot of settlements were different between NSE and BSE and all that. That is where I started making some, because I had burned my fingers in the market, so I never wanted to take more risk. So I started with arbitrage, investing money in the arbitrage, and made decent money there. And then with the uniform settlement, that those arbitrage opportunities kind of stopped because the settlement between NSE and BSE almost became same, and then you did not have that arbitrage opportunities. That is
Right.
where we realize change is the constant thing. You have to keep on changing your strategies, and you have to adapt to the new situation and all that. And that is where I started exploring the proprietary trading desk aspect of it, where you trade the market intraday and overnight as well. You carry on some positions, and you try and make money out of them. So I did that for around say 18 19 years at Naman. I developed a lot of strategies there. I developed a lot of traders there. I recruited a lot of people. I started a systematic desk in 2012, and December 2017 was the last month of my employment at Naman Securities. January 2018, I started this company called Compounding Wealth Advisors, and we are completely rule-driven, algorithm-driven organizations. All our investment decisions, all our trading decisions are based on some model, and our research is our strongest part. Our research is an ongoing process. So it's been 7 years now, and a lot of our research is now getting productized, like how our investment product got productized through small case and equity baskets. Now, even option products we are making completely rule based, and we'll come out with our option baskets very soon. So idea is to have a rule based approach and completely rule driven approach, and try and generate consistent money in the market every year. That is the primary object.
Perfect. Okay. I remember, sir, we met in 2016, and I made my first system, first two systems I made, and I think you were the first client of us in Securities was, I think, one second or first or second client, right? And we showcased our strategy to you, and you figured out our issues, and you told us that this thing is wrong. This is where you have to work and all those things. I remember that meeting, and then after that we met multiple times,
Yes.
right? And like I'll tell everybody that Rakesh ji has been guiding us since 2016. We used to meet regularly every maybe month or 2 months we used to meet, right? Now it is reduced. He's also become busy, and then I also do not go out much. Okay, but in my mind, the first person whom to take interview, who from the market experts in India, and Rakesh ji was undoubtedly the first person to be taken. Okay, thank you, Rakesh ji, for giving us this opportunity. I would request you to start your presentation now.
Definitely. I'll just share my screen and we'll start with the presentation. And
I'll
Rakesh, my
keep my video off now. Okay.
yeah, yeah, that's fine. So uh, I made a very crisp presentation on rule-based investing. And before we go into any presentation, this is a standard disclaimer. Like investment are subject to market risk, please consult your investment advisor before consulting. And whatever today we are showing is a part of learning that we give to the market, is a part of give back. Like whatever we learn, we try and see that some other people also learn. And anything portrayed here is an illustration, and there is this is not an advice to buy or sell something. This is my effort to give back to the society whatever I have learned. Okay. So this is about us. This is my company is called Compounding Wealth Advisors, and we are in the market since last 25 years. And my company is 7 years old, and it's a SEBI registered entity. We have got SEBI registered investment advisor as well as research analyst certificate as well. And our objective is to consistently deliver superior risk-adjusted return to our clients and enable them to significantly compound their wealth. That is the primary objective. And this about me. Shobit has already mentioned everything. And over the years, I have my own way of analyzing the market, and I have converted all my learning into a completely rule-driven approach. And we have built a lot of models, and we continue to build a lot of models around equities and futures and options. What is our investment philosophy? Our investment philosophy is a completely rule-based approach. Every decision is made according to predefined rule, eliminating emotional bias. Portfolios are reviewed on a weekly basis to align the market dynamics, data-driven approach. We utilize multiple indicators and criteria, including price, momentum, trend, and other quantitative metrics. We write the winners and cut the losers short. That is where bulk of the money is made. Uh, and we adhere to the principle of letting the successful investment go while exiting the underperformers. Risk management through cash allocation. We shift to the cash during significant market correction to preserve capital and mitigate downside risk. Okay.
Sir,
And yes,
people are still saying that the voice is quite low. Can you just check? Maybe keep your mic little up above your collar. Yeah.
yeah. Okay. Okay. Now it's good.
Uh, for me it's good. I can hear you properly, but others can confirm.
So,
Okay, now it's better.
yeah.
So
Okay.
continue.
So basically, these slides summarize everything that we do. This is the power of compounding slide. This is when you compound anything, when you improve anything by 1% a day for 365 days, your ending result can be 37.8. Meanwhile, if you deteriorate anything by 1% for 365 days, your ending result will be 0.03. This is the way good things in life compound. The money also compounds this way. If you constantly keep on compounding money, then probably your end result is going to be very good. So let me take you some big picture. What is the big picture? Okay, this is the slide of various asset class return over the last 217 years. Okay, so stocks, bonds, bills, gold, and US dollar. Okay, US dollar has delivered minus 1.4% return, inflation adjusted. These returns are real returns. When you say real return, we adjust for inflation and then count the real return. Okay, so if you just keep on holding the dollars, then inflation will kill you, and your dollar is depreciating every year by 1.4% negative return. And gold has delivered 0.6%, bills has delivered 2.6%, bonds has delivered 3.5%, and stocks have delivered 6.8%. So clearly, stocks are the clear winner if you take the history of fairly large period of time, which is 217 years. But see, the difference in return is between 6.8 and 3.5 is huge. If you start compounding every year by say 0.6 and 2.6 and 3.5 and 6, these are the ending results. If you're just holding the dollar, US dollar, then your current value of the US dollar is only 4 cents to a dollar. If you're invested in gold, your current value could be 3.64 post inflation. And if you're holding bills, your current value can be $264. But if you're holding bonds, which are private bonds, your ending value can be $1,746 post inflation. But if you're holding stocks, your current value can be $1.6 million. That is where the real difference is made in life, and that is where the true wealth is created. Initially, the compounding does not look to be very high and all that, but as the time passes, the gap between the two return keeps on increasing. You see the now see the difference between the different asset classes. 1.6, where is $1.6 million and where is $3? So this is the power of equities. That is why we recommend you should be in equities, and this is the return profile of Indian market till FY23 from 1993. Okay, Sensex return has return of 11.7% CAGR. Nominal growth of Indian GDP is around 12.6% CAGR, and Sensex EPS growth is around 12% CAGR. The point I'm trying to make is whatever earnings of the Sensex are there, that is what that will almost mimic what is the nominal GDP growth of India, and that will almost mimic the Sensex return over a long period of time. So in between, you can have high volatile return, negative returns, positive returns, but whatever is the nominal growth is inflation plus GDP growth. Current GDP growth is in the vicinity of 6.5%, and you have around inflation of 4.5%. So around 11% nominal growth you have. That is what has been seeing the Sensex EPS growth, and that is what the markets are growing. And average return on equity from 2002 to 2023 is 16.5%. Asia Pacific, Japan, ex-Japan is 12%, and emerging market is 12.5%. So India is outperforming. First of all, you need to be in equity, and then you need to be equity in India because India is outperforming. And this is the track record of last 30 years. And next 30 years, I don't see the reason why next 30 years will be different than the current 30 years. And this slide is by White Oak Capital and by Ashish Somaiya. And uh, I like this slide, so I always present this in my presentation. See, let us see how Indian market have performed. Indian market has performed in patches. There were longer period of non-performance or negative returns. Like for example, earlier there was a 4x growth leading up to 1992. Market rose by 4x. Then there was barely any return for 11 years. Okay, there was hardly any returns. And from 2003 to 2008, top market actually went and grew 5x from in 4.5 years, 5 years, market became 5x. And for the next 5 years, again, market did nothing. And when the COVID crash happened, actually, for you can say for 10 to 11 years from this top to this bottom, market did nothing. So there are patches when the market delivers good return like this, like this, like this, and there are patches when market does nothing like this, like this. So you have to keep this in mind. While long-term returns are astronomical, but that long-term can be really, really long-term. And a lot of people who have entered market after COVID are not aware about this uh, equity sideways movement. They've all they've seen is like up and up and up. But equity goes sideways and it can remain sideways for many, many years. This is the chart of S&P for almost 100 years. Okay, you can see the similar kind of trend in that as well. From 1937, 1950, market did nothing. Then the breakout happened and there was secular boom for 16 years. Okay, again market did nothing right from 1966, 1980. Again there is a secular bull run for 20 years. Then market did nothing for 13 years, and now the current run in the market is almost kind of for 11 to 12 years old. So again, you will find several patches of non-performance in between. But if you see from this point to this point, markets are going up. But when you see such falls, such fall, you get kind of frightened about everything. And within every bull run, there are cyclical downturns. Okay, this is cyclical downturn. This is cyclical downturn. Again, this is cyclical downturn of COVID and all. And now markets are going up and up and up. So this is the cycle. And Nifty performance again. Nifty has a seasonality which says that Nifty goes 6x after every significant bottom. Okay, it becomes 6x here, and then 2008 it made a bottom of around 2200. From it went 6x from there with around 12,000. Again the COVID crash come, now 6x from here is around 45,000. Okay, so we expect the Nifty to touch 45,000 by 2030. That is what the seasonality is suggesting. If the Nifty goes 6x from here till 2030, it should be around 45,000. So that is what happens from every bottom, and that has happened in past. Okay, and again this is slide by my dear friend Rahul Prajapati of Concept. And now so far we have understood equity is a very good vehicle to make money. So there are three ways to invest money in equities. Invest directly in stocks, invest through mutual funds or ETF. Okay, there are the three ways you can invest in equities, and we have done some backtesting of all these approaches. If you buy and hold ETF since 2011-12, your return is around 12.93%, and your drawdown is around 39%, and your Kalmar is 0.33. Okay, if you are buying equity mutual fund and a good equity mutual fund, best performing equity mutual fund, then your return can be higher. I am not saying your return will be higher. I am saying your return can be higher if you are a good mutual fund picker. So there is an alpha to be made between ETF and holding a mutual fund, good equity mutual fund. Of course, with the help of advisor, you can do that, but there is some alpha to be made. But if you're doing direct equity investment, there is a possibility of making 27%. Okay. Drawdown in all cases is around 40%. Here is 34%, 39%, 45%. But the alpha here is much larger. So there is a case of for us to explore direct equity investments, and this is the result of one of our systematic investment algorithm. And the same period we have backtested. These are all backtested results, and there is again an alpha to be made from direct equity managing yourself to completely rule driven approach. So there is an alpha where you can improve your results by keeping your approach completely rule based, and of course the drawdown also goes down. If you are completely rule driven, your drawdown also goes down. And how to do it, I'll explain you in few slides. Is what happens is when we have understood that the equity is the way to go, and direct equity has definitely more alpha than ETFs and other mutual funds, but there are a lot of challenges in direct equity. Okay, what are those challenges? You have to actually do a lot of extensive research and analysis requiring great deal of time, energy, manpower, resources, and various factors. You have to invest into various factors called global macro factors. You have to invest time, effort, money, tracking industry headwinds and tailwinds, sectoral trends and cyclicality, business fundamental of individual companies, estimating long-term longevity of businesses, complex financial analysis and valuation exercises. These are direct challenges of direct equity investing. Okay, you have to assess the management quality, continuous monitoring and tracking of news, views, information, opinions, predetermined notions and biases with respect to particular stock and industry. You have to do astronomical, and it involves astronomical amount of subjectivity and discretion. Okay, which industry to invest, which sector to invest, which stocks to track. You know, what should be a tracking universe? Like for example, there are more than 5,000 stocks listed on Bombay Stock Exchange. Which stock you will pick up as a something you track, and how many stocks you will do the research, how many management quality, how many con calls you will attend, how many quarterly results you will see. It's very, very difficult. After showing like scanning through 6,000 stock, which stocks to buy, you are at a loss. When to buy? Again, if you have finalized which stocks to buy, the next question comes is when to buy it. Should I buy it now? Should I wait for some correction, or should I buy when it is rising? And once you have bought it, how much to buy? Okay, you have 100 rupees in the pocket. How much you should buy? You should buy all 100 rupees, or you should buy 2 rupees, 5 rupees. These are the real questions. And how long you will ride the winners? When you have bought, suppose the stock comes in favor, how long you will ride the winners? लाइक 100 का चीज 120 हुआ तो बेच देंगे, 150 हुआ तो बेच देंगे, 1000 तक रहा देखेंगे, 10,000 तक रहा देखेंगे. हाउ आर यू गोइंग टू हैव दिस followed up objectively? Okay, how long you before you cut your losses? Suppose आपने कुछ, you have bought something and the prices are going down. When you will cut your losses? When you will decide that my hypothesis is wrong and I should cut my losses? And these are all difficult to test and validate all this investment hypothesis. And emotional turmoil, analysis paralysis will happen, information overdose will happen, impatient will happen. All these challenges will be there when you are actually investing in direct equity. And I hope everyone agrees with this. If you are agreeing this, just say yes in the chat, so I'll understand that you of course agree with this also. So these are the challenges, gentlemen. Yes or no? Yes, so people are saying yes. So yes, I also first faced those challenges, and that is where I decided I will go rule based and I will solve all the problem in a rule based approach. Okay, so challenges are there, but we have a way to solve the problem. So how did at CWA we solve these challenges? Okay, we developed process driven approach towards stock investing. We have developed several systematic investing strategies involving extending use of quantitative parameter, technical analysis, price action concept. These systems are designed to let our winners ride. So ये जो problem, this problem was there, how to ride winners and cut the losers. That we have also done completely rule based. Okay, and we have leveraged a lot of technology so that execution is easy. We have back tested and validated this strategy on thousands of stocks over a period of 12 years, and then we have made it live. Robustness checks have been performed on these rule based investing systems. Okay, so I'm going to share one of the systems with completely rule based approach, how you can apply this system and generate return as good as any good fund manager or a good mutual fund or a good ETF can generate. Okay, so let's go to the system, and we have named this system as CWA2 Sigma, and this is systematic equity investing strategies. More than 18,000 people have subscribed to this, and it is completely free, and it is available on TradingView. And I'm going to share the rules right now. We have coded that in TradingView, and it is in invite only mode. To post this presentation, if once you send your invite on our QR code by filling up the Google form, please fill up the details correctly so that we can give you the access of this indicator on TradingView, and you can use it for your own purpose. And this is for education purpose, and you can backtest yourself and change the parameters and check it and everything. So I'll go with the system now, and I'll give you the rules of the system as well. So before I go to the system, let us understand what is a Bollinger Band, because this system is based on Bollinger Band. So Bollinger Band is nothing but a technical indicator used for analyzing price volatility. Okay, it consists of three lines: middle band, which is simple moving average; upper band, that is SMA plus standard deviation into multiply two standard deviation, standard setting, and SMA and two standard deviation on the downside. Okay. So there are three bands. One is SMA, two standard deviation above SMA, and two the standard deviation below SMA. Okay. And this is how it looks like when you plot Bollinger Band. This is the Bollinger Band. Okay. These are the price actions. This is the middle band, which is SMA. This is two standard deviation above SMA, and this is two standard deviation below SMA. So this is how Bollinger Band looks like. So what is the strategy? It tracks NSE listed liquid scripts, around 1,500 of listed equity scripts we are tracking. We will provide the list at the end of the presentation to Sovit sir, and he will definitely share with you. What is the position size? The question of how much should I buy is answered here. We should buy 2% of capital. Suppose you have 10 lakhs capital, then you should invest 20,000 each stock. What are the entry rules? Entry rule is weekly close above upper Bollinger Band. Setting is 50 and 2. The standard setting of Bollinger Band is 20 and 2, but we have modified it, we have optimized it to a setting of 50 and 2. So your middle band has to be 50 SMA and the standard deviation has to be 2. Okay. If the price weekly close, we have to look at the weekly chart. We have to see the price. If the weekly close is above upper Bollinger Band, then you have to buy. This is the entry rule. What is the exit rule? Exit rule is initial stop loss of 20%. If you after buying, the stock closes below 20% of your initial buy as on Friday closing, then you should exit on Monday morning. Okay, this is the rule, and this system is a weekly system. So everything you have to apply on a weekly time frame. Okay, you have to wait for the entire week to get over, see what is the closing price, and then take action on coming Monday. Okay, this is initial stop loss of 20%. Or suppose price comes in your favor and you initial stop loss is not hit, then how do you exit? How do you lock in your profit? So you trail those profits if the price close below 100-week exponential moving average, then you exit. Okay. Or the third one, if the close below average true range, which is ATR, 14 and 1.8 is the stating. If the close is below ATR, then you should exit. If the close is below 100-week exponential, you should exit. Or your initial stop loss is hit, your price is below 20%. Then these are the two exit rules, and it is as simple as this. This is all you need as an information. And
So this ATR
believe,
is also weekly, right?
yes, everything is weekly. ATR is also weekly.
Perfect.
EMA also weekly. Stop loss also weekly. You have to take action Monday morning after the week closes. You have to allow the price to close. Okay. So it's fairly simple, Sovit. Any questions so far?
It's very simple. I don't think there's any question. In the chat box, there's no question as of
Okay.
now. And even if there are some questions, we can take them
Definitely.
after
Of
your
course, post my
presentation.
presentation, we will take the questions as well.
Yes, sir.
So this is the simple. Let us see what is the backtested result of this system. Okay. We have backtested this system right from 2011. So 2011 being the first year, and 2025 up to March we have backtested. Okay. Up to March. So this is the return, CAGR return of the system, 23%, with an average annual return of 28%. It remains in the market for 90% of the time. So 10% of time it sits on liquid. Okay. Total number of trades during this period, that is almost around 14 years, the trades are only 700. But 50 trades a year. That's it. That's about it. 4 trades a month. That's it. That is all you need to do. Okay. Winning percentage is again below 50, 37% only. So we are not claiming that we are right most of the time. But when we are right, we make 131%. Okay. Losing trade is 62%. But when we lose only 15%. Okay. So that gives us a payoff ratio of 9.23. Okay. When we lose 14. When we make 131. This is the average of all winning trades. This is the average of all losing trades. So payoff ratio is 9 and winning percentage is only 37%. And the max drawdown of this system is around 39%, which is lesser than index, almost as an index, but returns are as double as index. Okay. So that is what the backtesting is showing. And let us take some few examples. This is example of multi-bagger system that we are showing, CW2 Sigma, CG power. The system picked up CG power on 23rd of October at 25.95 and it sold at 552 on 14th February 2025. Okay. So it hold for around 4.5 years. Initial stop loss was never made and now it started trailing stop loss through this 100-week moving average and ATR. The price never closed below either ATR. This is ATR line. This white line is ATR line. The price never closed below ATR line. It never closed below moving average till here. So on this point, it closed below moving average and we sold off. So around 2000% gain in 4.5 years. Another example, JBMA, similar 1000% gain in a period of 4 years. Another example, Avanti Feed, 3200% gain in a period of what? 5 years from 2013 to 2018. This is the power of this simple system which drives, it rides the multi-bagger stocks and it has a very, very clear mechanism to exit when the price goes down. Let us see some of, like, it's not that it is only riding only small cap and mid cap. It's something blue chip like Britannia also. It took the signal on 26 April 2013 at 283 and 2018 it sold after 5 years at 3,115, so 1,000% return. So these are some of the example of winners. Let us see example of losers. Losers, Ashapura Mine Camp, it crossed the upper band here and then it hit the initial stop loss. Okay, so we exited here. And another example, Swan Energy, it bought at 787 and the initial stop loss hit and we sold at 589. So combination of winning and losing, all the examples we have shown. Winners are only 38% of the time and losers are 62% of the time. But when we gain like this, something like this, 3000%, 1000% and all that. So that makes the system very profitable in the long run. And this is not all hypothetical. Such kind of systems we are running live on small case, and I'll just show you the live returns of this our one of the baskets. So it's not the same basket as I've shown the rules. It's a different basket. But the reason I'm showing this to you people is to make you believe that this is actually doable in the live market. Okay. And this is our small case basket. You can check out on cwa.smallcase.com. The live performance of this basket. It tracks Nifty Total Market Index and invests in the best suited 35 stocks of the index. So basically, you allocate 3% to each stock, and maximum you can have a 35 stocks. Every stock can get a 3% allocation. Portfolio rebalancing again is completely weekly, and recommended investment horizon is 3 to 5 years. And current holding of the system is 3% only mid cap, 22% small cap, and 75% is in debt as of certain date. Okay. So as of I think this presentation is of March. So as of March, it was sitting on 75% cash. Now we have deployed a lot of cash since the markets are going up. So it is no longer sitting on cash, and it is almost deployed to full extent. We launched the system on 22nd March 2023, and the current NAV of the system is 187. Okay, and total market index NAV from the similar debt is around 130. See the kind of alpha it is capable of generating. Such kind of systems which are very, very easy and which can be followed by any individual. You can generate this kind of alpha in the market. And just give you an example how system goes into liquid when the market goes down. When market started following from October like this, then system was deployed completely 100% deployed on this 30th September. But as the weeks progress, the red portion is the cash level that was holding in the system. See, the red level started going up, and by the end of March, we were almost sitting on 75% debt. And again now, from April onwards, the deployment has started, and the system is almost fully deployed. When the market corrects, system goes into cash, and that is where the outperformance comes, and that is where the drawdown is also limited. Like it draw down CW all cap, they draw down around 22, 21%. And the total market index draw down around 22.5. So there is a outperformance on total market index on a drawdown side, as well as there is outperformance on the return side as well. What if the market corrects another 10%? Probably system will go to cash, but market did not correct. Market went started going up. System again deployed everything back. Okay, so this ends my presentation, and this is the this is the QR code that you need to scan if you want to avail this CW2 sigma indicator. We have we have coded this indicator on TradingView. This entire investment system we have coded as a indicator, and you can actually scan this QR code and fill up the Google form. Please mention all your TradingView ID correctly so that we can give you access to you. After you get an access, you go to the indicator in invite only mode, and that is where you will find this indicator. More than 18,000 people are using this, and it is completely free. You don't have to pay anything. And this ends my presentation with the usual disclaimer. And these are our contact details. If you want to get in touch with us, in any case, these are our coordinates. And with this, I will end my presentation, and I am open to questions now. Uh, Sovit, any
Hello,
questions
sir.
or anything you want to ask? Anything?
There's one question in the chat box only. How much is the max open position in this system which you showed?
So when you say allocate 2%, that means you can have maximum 50 positions open. Okay,
Correct.
because after that your capital will get over, and we do not take any leverage in the system. So once you are deployed 100%, you should stop investing. So basically,
Obviously.
yes, to answer your question,
Yeah.
maximum position is 50. Okay. What is the ATR multiple? That is the question. ATR multiple is 1.8, and you have to use weekly ATR. Okay. Standard setting is 14, and standard setting is 1, but we use the multiple of 1.8. Okay.
Okay. Okay, sir. Before we get more questions, I have one question.
Yes, yes. Tell me.
Uh,
You yourself are a system designer. How you have a question?
I can have a lot of questions. Okay, so I just wanted to know when you think about a system like this, what you showed, right? What goes into your head? What are you thinking at that time? कि Bollinger Band ही choose किया. Okay, so something behind that. How does your mind thinks about it?
So this system was detailed. It was discussed in a book called Unholy Grails by Nick Raj. Okay. So when we met in 2016, that is where I read that book, and I was I was very intrigued with the very simple system, and he claimed in that book that he is using this system since last 30 years,
Wow.
and the system has a CAGR of 29% in Australian markets. So as it is, I was looking for some rule-based approach in investing world, and I wanted to solve this puzzle of investment. And this system kind of got me excited. I coded this system and I made my own changes, and ultimately I'm using this system, and we've listed this system on small case also, and it goes by the name CWA MIL 25. So when I see a system, then I realize that everything can be clearly defined. Okay, and you can objectify it, and you can make the entire process of investment very simple, because investment appears to be very complex subject, and it is a complex subject. But if you the crux the entire crux lies in how well you execute your own thoughts. Okay, that is where the crux lies. And when I'm making a system, uh, I'm looking at like how I can generate better risk adjusted return. So I'm not only focusing on return, I'm focusing on drawdown as well. So my
Right.
I always
I know
mention,
you give a lot of importance to drawdowns.
drawdown. So always I try and keep that to minimum. I try and reduce that. And return is a function of market. Market, if the markets are good, return will come. If markets are not good, no matter what you do, return will not come.
Right. So,
So do
sir,
you
this,
yes, tell
yeah,
me.
sorry, sorry.
Yeah, tell
No,
me.
you can continue.
I was just reading some questions. So
Okay.
uh,
That will take little later.
okay,
Okay. I
okay.
have a lot of
Let me
questions.
answer you first. Yeah.
Yeah, you have to satisfy me first.
Yes.
Right. So this was you read a book and you got an idea. That is one thing, right? But when you are like seeing the market, you're observing. I know you are a very strong observer of the market, right? So when you observe the market, what conditions do you think? What goes on in your head at that time? If you are open to share.
Yeah, absolutely. So first of all, it's important for everybody to assess the overall environment in the market. Like overall environment in the market from October onwards started deteriorating. How did you come to know? Like all the parameters, like if you're following fundamentals, everything was pointing towards overvaluation. Okay, small cap, mid cap, even index was overvalued. Then the economy started slowing. Okay, so it's not, even if you're following something quantitative and on a basis of technical answer, you have to keep everything in mind. Okay, when economy was slowing, earnings started slowing, FI started exiting, that is where the correction happened, and valuation concern was there, and people were not ready to listen, people, because prices were going up. Okay, so people were continuously buying and all that. So the previous 6 months was writing on the wall whatever happened. Okay, so once you are back to March, and you know there is a seasonality in March also. The market generally bottoms around March, and from April onwards, the market starts
It starts.
is generally upwards. So between January and March, it's a difficult thing on a long only side. So these are, see, it's a multi-prone approach. You are not just looking at one aspect. Okay, you are looking at seasonality as well. You are looking at international market also to assess the overall environment. You are looking at fundamentals also, and you are looking how many stocks are kind of rising like breath. You are looking how many stocks are hitting 52 weeks high, how many stocks are hitting lifetime high, to assess the overall environment. So every market provides you some good 2 3 months every year where you can make hell lot of money, provided you don't lose those money in the balance 9 months. Okay, that is where the crux
Correct.
lies. So
Right.
it's important to assess when these 2 3 months are there, whether you are in a good patch, you are in a bad patch, and there are ways and means to find it out through various quantitative methods also, and as well as through your own experience also. So quantitative method can be fundamental, it can be technical, it can be breadth studies, or it can be liquidity studies, or it can be many other studies to analyze, because timing the market is very difficult.
Right.
And if you try and time, majority of time you lose out on returns. Okay, that is what the studies, and someday I will show you that data also. What if you try and time the market, how your return is reduced, and how you miss out on even good days if you try and avoid bad days. So that is a subject matter of some other conversation, because it's a
That
subject
will
by
be,
itself. Timing the market
yeah,
is a subject by itself, and so one of these days we should take that subject also.
definitely.
I'm taking that as a challenge again. I want to simplify that as well. Since the way I've simplified investments, I want to simplify the timing aspect also. How you should time the market.
So
So
I'll give you a target for that 1 month from here. We'll have one more
maybe
webinar.
1 month, 3 months, whatever. Research is still on. I'm trying to find some optimized way of mechanical way of timing the market. Like, okay, when XYZ happens, you exit the market. XYZ happens, you enter the market, and that is where we look to improve our risk adjusted return. That is the next area of study that we are doing.
Great. Okay. And when I saw your system, the first thing I got was that when you are taking, say, 50 weeks, right? So this is 50 weeks is almost 1 year,
Yes.
right? And Bollinger Bands are you are taking when the price is above Bollinger Band, right? So it clearly
Up.
shows that it's a 1 year breakout,
Yes. It is not only 1 year
actually,
breakout. It is two standard deviation move.
right?
Prices are running, and they are running like anything. So there is something happening. Okay. That is the, see, normally what is two standard deviation? Two standard deviation is like 95% of the stock.
Abnormal. It is like something abnormal. 95% of data will be within two standard deviation, right?
You are just looking for 5%. Okay. Oh, the whole market never doubles, the whole market never becomes multi-bagger. Only 5%,
Correct.
3 to 5% stocks
So
become multi-bagger.
5% will nahi hua na. Here there will be 2.5% because we are seeing only on the upside. We are not seeing on
Yes,
the downside.
right. So the success rate is only 37%. So
Correct.
5% ka bhi you have to do 37%.
Right.
That means only 2% of the stock that you will catch will become multi-bagger, and they will deliver the kind of return that will generate you wealth. Okay. Your move has to be with such vengeance that price closes above upper Bollinger Band, two standard deviation.
Right, right. Okay. And your exit 100-day
100 week.
EMA is like 100-week EMA, right? Sorry. So it is like 2 years. Like 100 weeks is simple.
So once I have observed a lot of multi-bagger stocks. Okay, I went back and see a lot of multi-bagger stocks. Lot of multi-bagger stocks also correct hell lot of a thing. They correct 30%, 35% from top, 40%. Still, they become a multi-bagger. Okay, so idea is if your entry is above 50 and two standard deviation, why your exit is below 100 week? Okay, that is a question you are asking. 2 years. Okay, 2 years
No, no,
and
I'm not asking. I'm just saying that it's a good rule because you are holding for 2 years, right? If you're looking for a stop loss which is like 2 years old stop loss, like it has a lag, so it has a 1 year lag.
yes,
100-day moving average will have a 100-week moving average will have a 50-week lag, right?
definitely yes.
So you are taking a 100-day, 100 1 year lag also.
So that is because every multi-bagger also goes through cycle. It rises, it falls, it again rises, it falls. So 1 to 100 SN, it doesn't become like that. Okay. 1 to say 2, it becomes 2, 2 to it becomes 1.7, 1.7 to it becomes say 3.5, 3.5 to again it becomes 2.5, then goes to say 7, then it becomes again 5. So if you do not have sufficient room to allow the correction, then probably you'll stop out very prematurely. You have to
Correct.
catch 1,000%, 2,000%, 3,000% move. You have to
You
allow
have to
the
give space.
intermediate correction also.
Correct. Yeah. And you are holding on, you're exiting also if with a 20% drawdown if it's sustained over a week, right?
Yes,
The 20% drawdown rule or stop loss rules we have kept, right?
20% is initial stop loss. So after
Yes.
if you enter and if the stock corrects more than 20% after your initial price, then you are exiting. That is your initial stop loss. The balance two, like ATR rule and exponential moving average rule, they are trailing stop losses. Once the stock comes in your favor, then how are you trailing it? So that your gains are also protected, so that you don't give up on the entire gain. You have to protect
Okay.
your gains as well, right?
Right.
And the ATR rule is for the reason that if suddenly some stock specific announcement comes or some news comes or corporate governance issue happens, if the stock like falls below 14-week 1.8 times
Right.
in a single week, then you're exiting. There is something wrong. There
Yeah.
is something that
14
you're
weeks is
not.
almost 6 months, 3 months, right?
Yeah.
So I'm thinking everything is like 1 year, 2 year, 3 months. So everything you have selected is based on cyclicality only.
Yes, definitely. And since it's an investment system, I have taken it as weekly as my time frame. People are free to modify this on a weekly time frame, on daily time frame. They can modify the stop loss, they can optimize the results and all that, and they can use the way they want to. I've just given you the framework how this should be used, and a similar system is already live since last 2 years in a small case platform.
Right, right. I liked your approach in this. That is, I'm like breaking it into your rules. I like to break rules to understand the system, and your entry and exit should be in sync, right? If your entry is very good, like in this your case, your entry is very good because it's a 1 year breakout of two standard deviation, which will happen very rarely. Like only 1.5% stocks will actually do that, right? And if you keep a very close stop loss, your exit will come and you will not get benefit of that good entry,
And you're not trying to
right?
make money out of every trade. You're okay making money out of 4 trades out of 10 trades. So you do not have that ego to be right also.
Right.
I'm
Yeah, with systems, that is an advantage because with systems, we can always say that system had hit a loss. I didn't hit a loss, right? So we get separated from the system. We are different. System is different, right? So
right.
it helps in that case. Okay, let's take some of the questions and then we can discuss further. How to rank stocks if most stocks pass the criteria?
So it is first things first. When you start the system, start with the existing portfolio. Okay, if you start with clean slate, for example, So there are two ways. Either on the basis of backtest, you make a portfolio now, or you start making a fresh portfolio from this point on. जो भी signal आएगा, I will take that signal. Okay. Once your 50 signals are over, your portfolio is full, you are skipping all other signals. Okay. So ranking will happen only when suppose there is only two positions that are required to be filled, and there are 7 signals or 10 signals. How do you choose them? Then you probably apply some RS method, apply some
Relative strength.
relative strength method, and you choose the strongest one. Okay, that is how you choose it.
Okay. I was having an interview with Jerry Parker last week. Okay. And you know Jerry, I think in
Yes, yes,
2020, he was one of the speakers in Algo Convention. Yeah, you have seen his
yes.
talk. It's there in the YouTube channel. You can watch it whenever you want. Okay. So what he said was that if you limit the number of, say, like 50, then you are not truly trend following because you are limiting like the next trade which comes, right? You are skipping that. You are not taking all the trades in your system which is coming. So you're not obeying your system. As per him, that is his viewpoint. So
No,
what will you
so
say
I have a
about it?
counter view to that because see, you have finite capital, you don't have infinite capital, and you have a capital allocation rule. If you allocate 2% of your capital, at the end of 50th stock, you will run out of capital. So what will you do when the 51st come? If you want to take 51st, either you induce more capital, which will dilute the return, or you sell some of these and then you take the new one. That becomes a new system by itself. Like out of 50, you don't know which will perform, which will not perform. How are you
Right.
going to allocate money for the 51st trade? So I do not have a clear answer for that. So I will definitely skip. There is a possibility that the 51st signal or 52nd signal may turn out to be multi-bagger. But that's how it is. Because that is how systems have been backtested and that is how the returns have been arrived. So there is a good chance that 51, 52nd, 53rd, 54, whatever you are kind of skipping because there is no space, there is no capital available. Out of that, something can become multi-bagger or all those signal can become stop loss also. You don't know.
Correct. Yeah.
So there are two sides to it, right? And
Right.
if you can answer me, how are you going to do additional capital? Are you going to apply leverage, or are you going to liquidate some of your existing position? If you say suppose liquidate your existing position, what is the rule? Since it is a rule based approach,
Right.
what is the way to liquidate?
Liquidate. Yeah.
So if you
That
have
again is
answer
a
to that,
question.
uh, so if you have
And then
answer
you
to
have
that,
to you have to backtest that thing also, right?
absolutely you have to backtest. And if it improves your result, do it. If it doesn't, then don't do it. Simple.
All right. Right. It's like a difficult question to answer. Okay. I also use similar method what you do. Okay. And what two things I can say on this is that uh, backtest has that bias, right? Because initially, if few of the big winners come in your backtest, it will show you very good results, right? Initially, when and generally it comes because if the new, especially when there's a new market which starts from the bottom, like right now, if you see, but market everything was like down and suddenly started to go up. So initially, only those stocks will come in who have to go much higher. Generally, they are the leaders, right? So generally, you will catch leaders in such cases, right? Because initially, your trades will fill up your capital. So that is one argument. Another argument can be that I forgot actually. Uh, that see market like if you have this law of large numbers, right? Like you have 700 trades in your backtest, right? So some big winners you will skip, but for some big winners you will capture also, right? So it will nullify. Mota moti, it will be like okay, 2% CAGR here and there will happen. It
Yeah.
won't be a very big difference.
So when you say backtest has a bias, it had a bias in 2016,
Okay,
but from 2016 it is forward testing live,
correct,
and last 2 years it is on a public platform.
correct,
So where is the bias now, right? So
right,
when you initially tested, there must be bias.
right. In the backtest there can be biases.
Yes. So in past some of my systems have caught multi-bagger like RVNL, APA, JBMA. So now there is no bias. This is live. Okay, you can do it. You can actually execute. You can actually hold it.
Right. Right. Okay. Let's move forward with the questions. Does the selection also consider my fundamental analysis, any fundamental analysis as aspects as well?
So we don't use any fundamental analysis while selecting the stock. We use fundamental analysis for selecting the universe. Okay, like we are selecting 750 stocks, that is market total market index. So my first filter is that only. I'm using 750 stock, which is selected by exchange as a best 750 stocks. Okay, on the basis of their market cap. So fundamental filter is for selection of universe, not for the stocks.
Got it. Okay. Do you invest in Nifty or Bank Nifty only, or all Nifty 50 stocks, or all FNO stocks, or any equity meeting your
So
criteria?
my old system has different tracking universe. Like for example, CWA large cap leaders. It tracks only top 100 stocks. Whereas CWA Mil 25, CWA All Cap 35, they track total market index. There is around 750 stocks. And there are thematics also like defense. It tracks only defense stocks. There are around 20, 25 defense stocks in India. It tracks only, and it is the best performing fund of the current year, defense.
Yeah,
But it will run in patches. When the defense does well, it will do well. When the defense doesn't do well, it will not. It's the one of the best performing baskets this year for us. Defense is the best performing basket. But since it is thematic, it can the returns can be lumpy, erratic. It can do nothing for years. So you have to pick and choose your diversification.
correct. In that, your drawdowns can also be bigger because the
Definitely,
entire
you
theme
can
can go
remain in
down.
cash for very long period of time. Because
Right.
if the defense is out of flavor, you will go into cash, right? The moment you
Right.
go into cash, you can remain in cash for a very long period of time. And when the again defense performs, you can actually forgo some return, initial return, and then you'll get in the position. So yeah, these are the ways you
Yeah.
can get in and get out.
Yeah. I remember in 2008-9, infra was a big theme, and there were new mutual funds coming with infra theme.
Yes,
And mutual funds did not perform for almost 10 years,
15 years,
15 years. You know better than me, yeah.
15 years. They did nothing for 15 years. Now it has started performing. So
Yes.
it might do well for next 2, 3 years, 5 years. But again, intermediate correction comes, again they stop performing. So yeah, definitely thematic has its own advantage and disadvantage. But people want to have some thematic into their portfolio. That is why we provide that choice. Okay, the choice lies
Yeah,
with the
it's
people.
a choice. Yes, perfectly. Yeah. Sir, what is your view when to deploy money, since you were sitting on cash and now you are fully deployed cash? If I want to invest in your fund, when should I invest?
So we don't try and time the market, but there are certain quantitative parameters which allows us to invest fully on it. It allows to exit at a right time. Okay. So at the end of the March, almost 75-80% cash we were sitting. And the April, when the market improved, the new leaders come, the new stocks with good relative strength, good trend comes. So that we have to include in our portfolio. So that is a call that system takes, and definitely now we are fully deployed, and it took around 15 to 20 days for us to do that, but we deployed the entire fund. Okay.
So basically, better it's better not to time it. And if you want to invest, invest in
No, I
his
think to
small
answer
cap
the question,
immediately.
what is the best time to invest? I think best time is the now. Why I'm
Yeah,
saying you now? Because last 1 year ROC of the entire basket is next to nil. 2 year CAGR is 34-35%.
right.
So out of that, last 1 year has not done really well. So there is either flat return or a slightly negative return. Something like defense is doing well, but otherwise, broader market returns are not there for last 1 year. So if you want to really go about investing, it should be now, because this is the time where markets start performing, and might deliver a good return. So yeah, I think 1 year is very flat for everybody, including us. So this is the time if you want to really
Yeah,
invest.
perfectly. Okay. Do you consider liquidity of the stocks before buying any stocks in the backtest, or if yes, then do you look liquidity in weekly time frame if you trade weekly system?
Come again, what is the question?
Do you consider liquidity of the stocks before buying any stock in the backtest?
Yes, we have liquidity criteria. We definitely apply liquidity criteria and check the liquidity. And since we are our tracking universe is out of index only, like total market index or NSE 500 or maybe large cap, that is where the liquidity is taken care of. Okay.
Right. Okay. And if yes, then you look liquidity in weekly time frame, or you look it in or if you trade weekly system, yeah. So basically, you look for
So
liquidity in
you have to
weekly or
do
daily.
liquidity. You have to see it on a daily time frame because Monday morning you want to buy. Okay, will there be sufficient number of shares to buy on Monday morning? That is the whole
Right.
questions.
Correct.
So you whatever script you want to buy, there it has to be liquid enough so that whatever AUM you are managing or the number of clients you are managing, there should be sufficient liquidity. And if the slippage, like we have done slippage sensitivity analysis also. Okay. So we have provided for 1% slippage while buying, 1% slippage while selling. And even if you increase the slippage to 2%, then also returns are not kind of going away completely. They, uh, they will be tapered off around 2%, like 23 ka 21 ho jayega. But otherwise, the returns still exist. So yeah, fairly liquid item that we track, and if there is some trade to trade something of that sort scripts that come into a buy signal, we try and avoid that.
Perfect.
Something which is
Okay.
in a GSM or a ASM framework or something like that, we try and avoid.
Perfect. Okay. And what do you do when you are holding a security, but it goes to a ASM and or a GSM? Then do you exit it or you still
No, we
hold
don't
it?
exit. We allow the prices to decide. Because at the time of
Okay.
entry, it was not in ASM GSM. After exit, see, some of the ASM GSM scheme also deliver good returns. So it's not
Yes.
that they don't deliver returns. So we don't want to miss on that. At the time of entry, if it is an ASM GSM or TED to TED, probably we skip the signal. But after we buy it comes, then probably unless there is some corporate governance issue or something like that, we don't want to exit it.
Perfect. If we were have done that, then CG power would never been held, right?
Definitely, CG power कभी आता
Yeah.
ही नहीं. CG power was in LCLT. When the signal
Right.
came, it was in NCLT.
Right.
So after that, it becomes 700, right?
Correct.
So yeah.
How do you treat the system? Can you please share an example?
So I gave you the live example. So this is not a trading system. This is investing system. Trading system someday we can discuss definitely how to build a trading system and how to trade it. Maybe future system, maybe option system, maybe only equity system. We can discuss it when we talk about trading. This is purely investment system.
But he's asking like even if you have to tweak any other system, like even say this system thing, you think that okay, this can be better. Then what will you do? And say how will your thought process work around it?
See,
Suppose this
basically,
system you want to tweak,
you want to trade this system instead of
tweak,
investing.
tweak this system.
Tweak the system. Okay. So tweak is the best tweak you can do is you can do some optimization till certain period and then do the forward testing. Suppose you are testing the system from say 2011 to 2025. So you want to backtest till 2019, optimize it till 2019 and see how it goes till 2025. So when you do optimization, you please give some time for forward walk also because otherwise it becomes comforting kind of system. So I believe in optimization, but not complete optimization till date. So certain years I will optimize and I'll see whether those parameters are still valid or not. And if your system is well thought out system, tweaking some parameters here and there will not do much of a difference. If it is making hell lot of a difference, then probably it is over optimized system.
Oh, okay. Do you also use any scoring model for stock selection?
Yeah, one of my systems, which is listed as CWA multi-cap momentum gladiator, it does scoring. Okay. Another system called CWA dual momentum, it does scoring. Okay. So there are
Okay.
certain quantitative parameters, and top 20 will be taken as this thing and all that. So yeah, there are
Okay.
ways and means to score systems and score
Right.
stocks, and maybe you can top 10 or top 20 out of it, and just keep on rotating, because once they are in top, they might fall also. There are some better stocks that come. So the CWA dual momentum is the system where we are using all this methodology, and CWA multi-cap momentum gladiator, that is where we are using all this.
Okay. Fine. In case where price is expanding on upside for quite some time, where 50 MA is also rising up, now we might get an entry above 2 ST, but in a very strong trend that can be exhaustion, overextension, ready for correction to moving average, even if moving average, even if it remains in an uptrend. So our entry might not be appropriate if there's some rule to filter such stocks. What's your opinion on this?
So that is where that 60% failure rate comes. You fail those times, okay? You take
Right,
the signals and you hit 20%. See, beyond the point, you can't improve. Okay. See, long only system delivering 24% when Nifty is delivering 11, 12%. So that if you want to optimize that as well, then there are a lot of sacrifices you'll have to make. Right? Something like leverage, or you'll have to sacrifice on drawdown and all that. Okay.
right,
So beyond the point, long only system has this kind of return, and it's not very easy to improve upon returns without sacrificing on some of the parameters like drawdown and leverage and all that. So you take
right.
those hits. So whatever you said might be correct. It might have signal might come and it will hit your stop loss. So be it. Take the stop loss. Why you want to see? You don't want to go towards 100% correct system. It doesn't exist. Okay,
Correct.
it doesn't exist. Why you want to put so many filters?
Yeah,
So
right.
if you put so many filters, overall your return will go down, because number of trades will not qualify, and you will not take those trades, and some of the trades might become multi-bagger, and then you lose out of that.
Yes, right. Okay. Uh, how you started your rule-based trading journey? Because most of time I am confused which indicators to add up in setup.
So I've given you away a simple system today. Start with that, and read some good books on system, so which sir can help you. And yeah, see, yeah, it's a very individualistic journey. Okay, I have got you started. I've given something to ponder over. I've selected Bollinger Band as a prime factor. You might choose moving average. You might choose relative strength. You might choose something else for your entry and exit. And start building systems. Start coding it. Nowadays, ChatGPT does the coding for you. You don't have to code much. Start backtesting it. And Soviet sir is always there to help everybody.
Basically, you have to start somewhere. The
That
most
that that
important thing is that you have to take the first step. Okay. There are many systems which are there. Rakesh ji has given today. There are systems on Vivek Bajaj's face-to-face. Any one system you start coding, start say if you cannot code manually, say you cannot code, you don't know coding, then at least do paper trading. At least you'll get some idea about it, right? You have to start. I'm using indicator very I am using the indicator very powerful. Thanks. Okay, he's saying he's already using it,
oh,
and he's very happy with the performance.
so
Sir, do you take?
I get so many messages in email, on my mobile, or my Twitter direct messages, like people are using and people are happy. If the market is good, signal will perform and it will help you write the multi-bagger. If the markets are not good, it will hit stop loss, and it will hit stop loss. You don't have a choice, right? If the markets are not good, you will not get return. But if market are good, it will deliver return.
Right, right.
You will not miss
As
out on the
Perry,
return.
yeah, as Perry Kaufman says, you cannot make money in a trend following system if there's no trend.
Definitely not. you'll get chopped out. You'll be in drawdown, either time drawdown or a price drawdown. But if the trend happens, if the system is good, it will deliver.
All right. All right. Okay. Sir, do you take into account money supply in your other systems?
No, I don't take it. I track it, but they are not part of my rule-based approach. So I track Fed balance sheet, I track RBI balance sheet, how is the liquidity going around in the world, Europe and here and major markets, liquidity, whether they are doing quantitative easing, they are reducing the rates, what is the inflation outlook. I track all that, but that none of that has been used as a factor in the system that we make.
Okay. There's a question which you may like to avoid, but I'll
I will
still read
avoid
it
that.
out.
I know what question you are asking. Please avoid that.
Okay.
Let's go to the
Okay.
next.
Okay. What parameters define season for you?
What parameters?
Define season for you.
So if
I'm
you
not
can
sure.
reframe, if you can reframe, or you
Maybe
can allow.
cyclicality, maybe. Season is
So
cyclical.
cyclicality, you can use it as an overlay. Okay, when you're doing something, suppose you are sowing some seeds, you want to sow it during monsoon. You don't want to sow it in summer.
Right.
Okay, so when to use the system, when to apply those systems, you want to do it when the conditions are right. Okay, season might fail. You might sow your seeds and there may not be rain.
Right.
But if you sow your seeds every monsoon, like out of say 25 monsoon, you will end up reaping good. So your जो भी तुम्हारा जो है, you'll be able to use it for 23 years, 22 years, 3 years you might not be able to use it. That is when the drawdown
Right.
happens. So you can use it
Right.
as an overlay, right?
Got it. Perfect. Do you factor in volumes? How significant are volumes in your
I'm
system?
no, none of my system accounts for volume at all. I don't use it. Volumes I'm not using, and none of my systems use it. My
Yeah.
primary factor is always price, and everything derived out of price. Like
Right.
Bollinger Band, everything is derived out of price.
Right.
Nothing is derived out of volume, right?
Right.
Even volatility is derived out of price. Even
Yeah.
moving average is derived out of price. Standard deviation is derived out of price.
Right.
Entry is derived out of price. Exit is derived. So my primary factor, that is why we always call we follow price. Bhav Bhagwan che. That is the
Right.
term. We always follow price, and prime factor that we're using is price. We derive things out of price like trend, momentum, volatility, everything we derive out of price and then use it as a system.
Perfect. Okay. Please share the QR again, if sir, if possible, so you can share your screen. And I think there's a last question. Do you use Python for the rule-based system, or AMI broker coding, or simple Tradetron, or any other?
So for my option trading system, I use Python. For my investment systems, I'm using Ami Broker. So I'm using Python for mostly my option strategies. For my future strategies and for my equity strategy, I'm using Ami Broker.
Okay.
I'll just
So I
share my
think,
I'll share my
yeah,
screen for that QR code. This is the QR code. Yeah. Okay. People
one
can
side,
take
yeah.
a snapshot of this.
You can take the QR code from here.
Fill in the form, and in a day or two, we'll give you the access.
Okay.
So I'll stop sharing. Yeah.
Yes, sir. I think we are done with the questions. Anything else you have to say, or else we'll end the
So
session.
to the audience, start somewhere. Okay. You just don't get crippled by indecision. Okay. You can take a bad decision. The worst thing is not to take a decision. Okay. You have to start somewhere. You
Right.
don't get anything perfect in life. Okay. You get whatever you have, and then you start improving upon that gradually, and then you start learning. And you cannot make money out of borrowed conviction. Okay. You will not be able to use my system. You take my
Right.
system as an example, make your own system, and trade those systems, because I'll be able to trade my system with confidence, and you'll be able to trade it with your system with confidence. Take some leads from here and there, but you make your own system and start somewhere.
Great, sir. I think it was a great session, sir. That was not just a session, it was a master class in discipline, clarity, and market wisdom. On behalf of the entire Trading Heads community, I want to extend my heartfelt gratitude to you, sir, for taking time out to share not just strategies, but hard earned insights forged through decades of experience, shaped by market cycles and polished by the data. Sir, your ability to simplify complexity, to transform emotion into edge, and to show us how rules can liberate a trader, that's a rare gift. And tonight you have generously shared it with all of us. For decoding chaos to demonstrating how conviction is best served by code, your words will echo long after this webinar ends. Thank you once again for being with us.
Thank you so much.
We are richer now, not just in knowledge, but in perception. To everyone attending, it's if today's session lit a spark, let it become a fire. Trade not with noise, but with nuance, not with hope, but with rules. Until next time, stay systematic, stay curious, and as always, keep learning. Good night and thank you. Thanks a lot, sir.
Thank you so much. Thanks everybody for attending. Thank you.